Why is the Japanese stock market booming again? Pro-market reforms force companies to improve shareholder returns. Japanese companies have traditionally hoarded cash, which increases their book values, but provides little actual return. Almost half the companies on the Tokyo Stock Exchange have a price-to-book ratio less than 1. The Tokyo Stock Exchange now requires companies wishing to list to boost their price-to-book ratios above 1. This will be accomplished by these companies putting cash to work on stock buybacks and other measures that should improve shareholder returns. Japan's GDP growth rate exceeds the U.S. and other group of 7 nations. Japan's GDP growth rate is an annualized 2.7% in Q1, which exceeds the economists' forecasts of 1.9%. The GDP growth is likely driven partly by inflation. In April, inflation was at 3.5%, which is above the Bank of Japan's target of 2%. Japan should benefit from de-risking of supply chains in Asia. Japan represents a low-risk investment destination. The industrial sector of Japan is also uniquely suited to provide construction equipment, trucks, robots, machine tools, as supply chains move from China to emerging and frontier markets in Asia. We're seeing iPhone manufacturing moving to India. We're also seeing investment in Vietnam. Japan will be able to benefit by supplying the equipment and machinery for these operations in other Asian nations. Monetary and fiscal policies. The Bank of Japan has not raised rates this cycle despite inflation surpassing their 2% target. This policy helps stocks despite hurting their currency, the yen. Japanese banks have not suffered the shock of rising interest rates the way that American banks have. If the Bank of Japan starts to raise interest rates, the yen should strengthen, and it will lead to Japanese investors moving money from offshore banks into Japanese stocks and bonds. The Japanese economy and stock market should experience steady growth over the next quarters and years, fueled in part by the factors we've just discussed. Warren Buffett is placing a bet on Japan with his purchase of Japanese trading firms. These firms provide everything from energy to minerals, despite Japan having few natural resources. These companies derive most of their revenue from non-trade activities. They've built up interests in a wide range of things, from logistics to real estate. They're playing an increasing role in EVs and renewable energy.